Let's start with the Bitcoin story, because we're looking here at a 23,000 handle. It hit 22,000 just a few hours ago. How much of this pain in Bitcoin is simply a result of the macroeconomic factors? How much of this is a story of liquidity within the market itself?
Yeah, I think Bitcoin has become the ultimate risk-on, risk-off indicator. And right now, it is risk-off. What's fascinating about it is that it is mostly a retail instrument. There's some corporate buying, but it's not really an institutional asset. And it's dominated by retail. And a couple different things about Bitcoin I think are pretty interesting. One is that, as we all know, it trades on the weekend, but it tends to lead the S&P opening. It does predict it. That's pretty interesting. And the second thing is, it's really become a complement to the VIX. It shows you risk on and risk off. And I think the previous guest talking about a rate hike, wouldn't it be ironic if the Fed rate hike actually put a floor under Bitcoin and set up a rally? The very thing that's supposed to be replaced by Bitcoin would end up actually putting a floor into the marketplace.
Well, you get into territory that I think a lot of people are wondering, Bob, which is how much pressure there will be. I remember when we were talking to you earlier this year about the broader markets, you talked about money being asleep for 2 decades, so there was a need to recalibrate. And just watching the action on Friday and subsequently today, more broadly speaking, it feels like people are still recalibrating.
They are, but the thing is that things don't stay the same forever. We all know that. The easy era of money is over. We know that too. And things move on. But what's fascinating to us as a data analytics firm is, number one, there is rotation in analytics as well as the marketplace. You've seen a rotation from growth to value. And what we've seen is that squeezes, short side analytics, still important, but it's rotated to things like sentiment, market structure, and positioning. And that's what institutional clients really want to see.
Bob, let's talk about those institutional clients a little bit more and the mechanism at which they're actually trading this market. I believe I spoke to a source months ago who was saying that, sure, liquidity is an issue, but a lot of the market isn't really participating in, say, the stock market because they're hedging instead. Is hedging essentially the new shorting when it comes to how to deal with this market sell-off?
Yeah, that's a great point. So I actually think what's really interesting is if you look at some of the meme stocks, particularly GameStop, the headline is Fed active, raising rates, inflation. We know that story. And therefore, meme stocks are just not important to the marketplace anymore. Why? Because retail has basically bailed out of the long side of the market. But what we're seeing is that GameStop is still incredibly important to return. And it's actually I would say, probably one of the top 5 stocks that are actually driving hedge fund return. And what's a hedge fund want to do? They want to measure sentiment. And sentiment means different things to different people. Sentiment is not a substitute for buying in institutional investment land. What sentiment really means is the best long paired with the best short to give me the best risk. And so that's how people are using our analytics, is to map the market structure and find the securities that have the best return profile and put those on. And they're actually doing that.
And Bob, before we let you go, just sort of speaking of that retail crowd, do we have a sense on what they have been doing or navigating of late?
So, retail sentiment's a very funny thing. It's still, look, there's no question there's been a capitulation in terms of a lot of the retail stocks. And you can throw in Bitcoin and NFTs and everything else. So, retail is looking for liquidity in any way it can grab it. And I think you're seeing that in Bitcoin today. And I think you've seen it in some of the trading and the way people are trading some of the meme stocks as well. Retail is weak right now.